So you've probably heard about using your capital gains or your capital losses to your advantage, but you're not quite sure how to exactly do that. Well, in today's video, I'm going to walk you through on Fidelity how to recognize and use your capital gains or your capital losses to your advantage. And the great piece is that you're going to be able to do this all on your own. As a financial planner, I've recommended people to take advantage of both capital gains and capital losses within their own financial plan, and it's a great strategy that can really work. You can use capital losses to offset gain or to offset income, and then you can use capital gains to potentially get tax-free money back if you're within the right tax bracket. Well, today I'm going to walk you through on Fidelity exactly how to recognize these gains, what a long-term or short-term gain or loss is. When you walk away from this video today, you're going to be able to do this on your own. And I'm also going to help you figure out how to use this information and read your tax form so that you really understand what's actually going on with these gains and losses. But let's get into today's tutorial and show you exactly how to do this within Fidelity. Okay, so here we are within Fidelity, and you're going to go to your brokerage account and go to the Positions tab. This is going to show you exactly what you're invested in and give you a whole bunch more data that we'll get into understanding what it all means. But we're going to be looking for a specific investment that shows either a gain or a loss. I'm going to start here by showing you how to do capital gain harvesting. So let's go ahead and click on one of our investments. It may be VOO, it might be something different. And you'll see here under purchase history, it's going to show you all sorts of different information. The key thing you're looking at here is your total gain and your total loss and the term of the investment. So we have multiple pages here. I'm just going to click show all. And then as we scroll down, you'll see there's short term and long term. Short term means you've owned it for less than a year, and long term means you've owned it for over a year. So there's a different bracket for each one. A short term capital gain is treated as ordinary income, and a long term capital gain is taxed at a special rate. I'll make sure to link down below the IRS page on capital gain tax brackets so that you know the specific number for whatever year you're watching this in. But we're going to look for one that has a gain and says long term. So right here we can see on December 31st, 2024, we have a $98 gain. So let's say we're targeting that one for capital gain harvesting. Now you can come up, click sell, and then this menu is going to pop up. You're going to, under action, click sell specific. Then it's going to pop up a screen that's going to give you that specific information all over again. So we can sort this by unrealized gain, sort it by holding period. You can select which investment you want to sell, just check the box. Make sure it's a long-term gain if you're trying to take advantage of those long-term capital gains tax brackets. And then you hit apply, and it's going to put it in here for your order form. And then you just go ahead and fill out the rest of the ticket to sell it however you'd like to. And that's all there is to it. Now you've sold the investment for a capital gain. It's a long-term capital gain, so you're going to get that preferred tax rate. Now the cool trick is you can actually buy back the investment at the price near where you sold it at, and that's going to effectively raise your basis. So in the future, when there's even more gain on it, you're going to have a smaller tax bill because that gain will be smaller due to you raising your basis. So if you had a $50 investment that grew to $75, you sold it and rebought it at $75. Now when it grows to $100, instead of having a $50 gain from that $50 to $100 point, you only have a $25 gain from $75 to $100. So that can help you continue to raise your basis and improve your tax situation as you go if you continue doing this strategy year over year. And the same thing goes if you're trying to sell something for a loss. If you're trying to sell something for a loss, you'll do the same sort of thing where you'll do a sell specific, find one that has an unrealized gain that's negative. If it's long-term, that can offset long-term gains. Short-term can offset short-term gains, and then whatever's left over can help offset income up to a certain threshold. So make sure you look up that limit so that you know, but it can roll over into future years. But the exact same sort of thing here can happen where you select which one you want to sell, make sure it has a loss, and then you've realized that loss. The key thing to note here is you don't realize any of these gains or losses until you actually sell the investment. Once you sell it, that's when the gain has been realized. Now, how do you actually use this information when it comes tax time? Well, your brokerage, or in this case Fidelity, will give you a 1099 form. On the 1099 form, I have found this page to be the most helpful with this summary of proceeds from broker transactions. This 1099B section is going to show you exactly how much realized gain and how much realized loss that you had. And this, if it's positive, is going to be realized gain. If it's negative, that's going to be a realized loss. And that's a great way to keep track of it because you'll input this information into your tax filing software. And in this case, I'd have to report $157 worth of gain. And if it's a long-term gain, I get it at that preferential tax rate. Or if it's a loss, you can potentially use it against your income. But it's really simple. You find the one that has the gain or the loss, you sell it, and then when it comes tax time, it's all reported out for you on your form that Fidelity is going to provide to you. It isn't that complicated, and it can be a really easy process to do to benefit you for the very long term. And now just remember, this whole process, it's not too complicated. This is something I would encourage you to learn on your own. It's so fun to see your investments actually become beneficial for you and use them for your advantage, whether it's loss harvesting or gain harvesting. I'll have to admit though, tax gain harvesting is a lot more fun because you're actually making money, right? And you could potentially get a 0% tax bracket. That's a fantastic deal. Again, I'll make sure to link in the description the capital gains and capital loss page on the IRS's website so that whatever year you're watching this in, you can refer to that website and figure out if you're within that 0% tax bracket. But if you don't want to go at this alone, whether it's planning for capital loss or capital gain harvesting, please reach out. Leave a comment down below or send me an email and I'd be happy to set up a time to see how either of these strategies could be beneficial for your situation. But thank you so much for watching today's video. I really hope this was able to help you and that this guide was super useful. If there's a specific strategy that you would like to see me explain and show on video, please let me know down in the comments. But be sure to check out Financial Planning for Young Adults. It's a weekly podcast where we make financial planning simple and accessible for everyone. Thank you for checking out today's video. I'm Skylar Fleming, your financial planner, and have a great week.